Hey guys, it's Wisdom Wednesday, and I want to clarify some facts and misunderstandings and answer some questions about mortgage protection that frequently come up with my clients. Now, first of all, there is a major difference between MPI mortgage protection insurance and PMI private mortgage insurance. First of all, private mortgage insurance, PMI, is a type of insurance that protects a mortgage lender if a borrower defaults on their mortgage payments. PMI is usually required for conventional loans with a down payment of less than 20% of their purchase price, or when refinancing a conventional loan with less than 20% equity in the home. Now, PMI is paid monthly as part of the mortgage payment and compensates the lender for the extra risk they take on for lending to borrowers with a smaller down payment. PMI does not prevent foreclosure or a decrease in credit score if a borrower falls behind on mortgage payments. Okay. Borrowers can eventually get rid of the PMI by making consistent payments until they have at least 20% equity in their home, at which they can request to cancel it from their loan servicer. Now, the major drawback of PMI is that the lender is the beneficiary, not the family. This means that while the mortgage will be paid off, the family does not receive any additional funds to cover other expenses such as funeral costs, property taxes, daily living expenses, lost income. The lack of flexibility can be a significant issue for many homeowners, as you can imagine. On the other hand, mortgage protection insurance, or MPI, is a special type of life insurance that ensures your mortgage is paid off if you pass away or get sick with a critical, chronic, terminal illness or disability. I can't emphasize that benefit enough because I have more claims on living benefits than I do death benefits. Now, when you buy an MPI through a life insurance company, you can name your family as the beneficiaries. This means that instead of the money going directly to the mortgage lender, your family receives the payout. They can use the money to pay off the mortgage, cover living expenses, or handle any other financial needs. So the key points to understand here are that mortgage protection insurance provides protection for your family. The payout goes to your chosen beneficiaries, not the lender. It also provides flexibility. The funds can be used for more than just the mortgage, like funeral costs, medical bills, and other expenses. It's also affordable. Now, I will emphasize that everyone is insurable. Nobody is uninsurable, but you can potentially get lower premiums or qualify for lower premiums if you are in good health. All right. So mortgage protection also provides comprehensive coverage, options for additional coverage like accidental coverage, which doubles the face value of the policy if you die in an accident. You can add children's riders, additional disability riders, which will pay out additional income if you become disabled, waiver of premium riders, which means that the insurance company will waive the premium payments on your policy if you become totally disabled and can't work. You can add return of premium riders, which will pay back all of your premiums on the policy if you don't die or get sick and you don't have to use the policy and you pay off your mortgage. Another thing I want to address is the question, why would I need private insurance if I already have life insurance through work? Great question. Well, if you have life insurance through work, that's awesome. That's considered icing on the cake. While having life insurance through your workplace has benefits, there are several reasons why you should consider getting mortgage protection insurance, in addition to your employer-provided life insurance. First of all, employer-provided life insurance has limited coverage amounts, which means that it may not be sufficient enough to cover large financial obligations like your mortgage or lost income. Your coverage is also tied to your employment. So if you change jobs, get fired, lose your job, you may lose your life insurance coverage altogether. This instability can leave you and your family at risk, obviously. So private insurance, on the other hand, is independent of your employer, providing continuous coverage regardless of your job status. It will ensure that not only your mortgage is paid off, but other significant financial burdens beyond your mortgage payments will be taken care of. Unlike employer-provided benefits, private insurance also includes the living benefits, like I've said already probably 3 times. If you get sick with a critical, chronic, or terminal illness, become disabled, you can draw money from the policy to cover those expenses or whatever financial burdens you have at the time. So imagine what your family's future would look like without the security of your home. How would your family cope with the mortgage payments if something happened to you? What would happen to your family's home? What major transitions would your children have to make, such as changing schools or leaving friends? What would happen if you no longer could provide for them because you're too sick to work? Do you have peace of mind knowing your family will always have a roof over their heads, bills paid, and food on the table? How much is the peace of mind worth knowing your loved ones won't face losing their income their home during a difficult time or unexpected time? So if you have any questions about mortgage protection, or you'd like a complimentary financial analysis to see if mortgage protection is the right strategy for you, or if you know someone who can benefit from this content, as always, like, share, and please comment MPI below, and I will send you a link to schedule a time on my calendar, again, for a complimentary review. Thank you all for watching, and I hope you all have a joyful and blessed 4th of July. I am staying in. I'm not going out into crowds. We're going to just shoot some fireworks off here and have a cookout. Should be a wonderful time, but I'll look forward to seeing y'all soon.